Hey, what's going on, everyone? So I have an idea for you that you may want to keep your eyes on. Today's video is about City Office REIT, and I'll give you a brief little intro, and then I'll talk about the game-changing news that pretty much changed everything. And then I'll talk about my strategy and what I'm planning to do with it. So City Office owns 64 office buildings and a little bit of land. They're actually really large and nice Class A and Class B properties situated in great locations. Here's their 5-year chart, and they closed on Friday at $12.90. They currently pay a dividend of 4.65%. They have approximately 44 million shares, and so that puts their market cap at around $570 million. So last Friday after the close, this piece of cheeky news came out. They announced a definitive agreement to sell their Sorrento property for $567 million. The property currently has no debt on it, so the net proceeds of $546 million come out to $12.38 per share. Now it's going to close in 2 chunks. $395 million in December of 2021 and $181 million in February of 2023. So they just sold 7% of their portfolio for the entire market cap of their company. So naturally, after the close, in the after hours, the stock shot up from $12.90 to $16.80. But I wanted to figure out, given the news, what is the stock actually really worth and whether there's still any upside left. And here's my napkin math to kind of figure this out. I used their second quarter earnings report, and I excluded their recent acquisition because it's related to Sorrento, and they're selling that. So the full year net operating income, or NOI, is around $95.6 million. I basically took the quarter NOI and I multiplied it by 4. Then I subtracted the NOI from Sorrento. And let me briefly just display my calculations so you know how I got that number. That means their remaining NOI is $90.6 million. Then I subtracted $6 million for ongoing CapEx, leasing commissions, and improvements. And I got the $6 million figure from this slide. So NOI after reserves is $84.6 million. I used a 7.5% cap rate, and I got a value of $1.128 billion. I did also use a different method of calculating the value. I found through industry reports the price per square foot of properties being sold in those submarkets. And so I just allocated the price per square foot for each property, and I got very similar values, and I'll show you that here. So I took this value and I added the net proceeds that they would get from Sorrento. And then I subtracted all their debt, and that would be the mortgage and preferred stock. And this is how I got the net asset value. And they have 44 million shares, so the value per share is around $21.60. So if my estimate of $21.60 is correct, that would imply there's another 28% upside from here. So we should talk about some of the risks and some of the reasons for why this might not occur. The first one is I did read through the purchase contract. The closing is not contingent upon due diligence, but it is contingent upon good title and also tenant estoppels. So there's a little bit of risk there for the transaction not closing. Alternatively, the buyer can also just default on the contract. And if that's the case, then they would kind of have to sue each other for the money. And that could delay the process. It could be kind of ugly. It would be expensive. Another reason is that the pandemic is still going on. And if it lingers for any longer, for like another year, their existing tenants in their remaining properties, they might not renew their leases because they might not want to go back to the office, or they just don't need that much space. And that'll diminish the value of their remaining portfolio. And then perhaps the third reason is that if you look at this chart of their stock, you'll see that there were people that bought the stock right before the crash, and they finally just broke even. So they might want to just get the heck out. And at the same time, there are people that have been holding the stock and they just got this 30% pop. So they might want to just take their profits. And all of those reasons would create selling pressure on the stock. My plan tomorrow is to open a position if I could get in around $17. I'm not willing to chase the stock up, so if it runs away from me, then fine. I wouldn't be surprised if it popped and then kind of slowly, gradually traded down over the next few days. But it's just something that we're gonna have to keep an eye on. If you do get in at 17 and then it starts to trade down, perhaps you should consider this. With the $546 million that they get from Sorrento, they could buy properties that are yielding about 6% and get $30 million of NOI after reserves. With a dividend payout ratio of 70%, they can add another 47 cents of dividends every year to their current existing 60 cents. So that means their dividend would go from 60 cents to $1.07. The current dividend yield is 4.65%. So the stock would have to trade at around $23 just to maintain this rate. So either way you cut it, I think the stock is probably going to go up. So that's my napkin math calculation. Let's see what happens tomorrow. And I hope you enjoyed the video. I want to thank you for watching, and I'll see you next time. Bye.